There has been an upward growth in Islamic products in Kenya, from banking to insurance and even an upcoming pension scheme. On our Pesata segment this week, I caught up with Hassan Bashir, CEO Takaful Insurance Africa, for insights on Islamic insurance. Thank you for joining us, Mr. Bashir. Now, Islamic products, be it financial or insurance, are relatively young in Kenya. How has the uptake been so far?
Well, the uptake has been great since the licensing of the first banks, the two Islamic banks, Gulf African Bank and First Community, about 4.5 years ago. The growth has been tremendous, to the extent that those two banks are somewhere now in the middle of the 40 banks in Kenya in terms of deposits and in terms of loans given and so on. So it has been tremendous. I think between them probably they're holding around 20 billion in deposits. That kind of proves that the demand for Islamic finance products was waiting to be tapped. And the same case has been for the Takaful. The Takaful company was licensed. We were licensed in 2011, and we did about 180 million in the first 8 months, and last year 2012 we did 430 million.
What has been the growth trajectory of Takaful Insurance since its launch in 2011?
We've had good growth. In 2011 we had 8 months of business. That was our introductory period ending December 2011. We wrote 178 million shillings. So in those 8 months, we crossed the IRA threshold, the Insurance Regulatory Authority threshold, for being licensed the next year, which I think is around 140 million. In 2012, we grew by 242% to 430 million. Our plan is to grow to 900 million this year.
You will be declaring a surplus, awaiting approval by the Insurance Regulatory Authority. Expound more on this.
Surplus distribution or sharing, profit sharing, is central to the Takaful model. It's what makes Takaful different. One of the key things that make Takaful different from conventional insurance. And the Takaful model will not be pure unless there is surplus distribution, if there is surplus. So we have dual reporting lines, both to the Sharia Supervisory Council as well as to the Insurance Regulatory Authority. We have both two accounts, one for the shareholders and one for the customers. And the customer account for 2011, which has fully matured December last year, December 2012, is due to declare profit. And our plans are to lay it out for the customers of 2011, how the risk fund account of 2011 performed, how much premium was collected, how much claims were paid, how much fee was given to the operator on the shareholder account, and when all claims have been paid and reserving have been made, how much money is left and how much of that we are declaring back to them. Basically, as if you invested and you are now earning dividends, what dividends are we giving back to our customers?
With the just concluded polls, most insurance firms have been said to have reaped on the back of political risk covers. How has it worked for Takaful Insurance?
I think there was misinformation in the pieces that were given in the media recently. A lot of billions were reported to have been won because there was no violence during the general election. Therefore, the companies have taken billions of shillings to their shareholders. That's not the case. The entire premium wrought during this time may have been several hundred million, maybe 200 million plus. And that is not necessarily profit. So I think while there was some premium were written, which premium may not really have reached critical mass in terms of insurance quality, and while there were limited, very few incidents of violence during the general election, what was reported is not exactly the case.
Now, what are some of the key challenges that you've encountered under Takaful Insurance, and how have you addressed them?
One of the key challenges is lack of Sharia-compliant investment avenues in the East African region. That is compounded by the fact that the regulator might not allow insurers to take premiums outside the country for investment. So the need to develop the capital markets in Kenya within the Islamic sector is very important to solve that problem. And I'm certain that the financial sector regulators are discussing that. Capital Markets Authority has been on it since last year, so we hope to see development in that area. Another key challenge is lack of conducive regulatory environment. We are a Takaful company, but we're still operating under the Conventional Act, and we have made submissions to the Insurance Regulatory Authority. So we hope that in the near future there will be recognition in the law of the Takaful model.
And finally, Mr. Bashir, what's your outlook on general insurance and Islamic insurance in Kenya going forward?
Overall, the industry is growing. There was significant change in attitude at both the regulator over the last 3-4 years, as well as the industry. The industry is taking the services to the Kenyans, moving away from rich pockets only to the districts and villages. And considering the devolved system that under the new constitution that we have adopted, you are likely to see further development in the insurance space over the next 5 years. So very encouraging, very interesting time for the insurance industry. We're looking forward to it.